Hey everyone, and thanks for jumping back into the Cryptoverse. This is your Thursday AMA premium video. Hopefully you enjoy the content. We're actually going to mix it up a little bit this week. I've talked before about bringing guests on to also answer your questions, just so we keep things a little bit fresh and not the same thing every single week. But basically the format of this video, we're probably going to spend about 20 to 30 minutes. We're going to go through as many questions as we can. Gareth is just going to give his opinion on these. Then after that, we'll go back to more or less the regularly scheduled programming. We'll all just go through the questions because some of the questions are more pertinent to things that I've previously said, rather than necessarily Gareth's opinion. And so I think that's what we're going to do. Gareth, though, it's a pleasure to have you here.
Hey, thank you, Ben. No, it's really cool to be here with you. This should be fun. I have a great time on our no shill zone, so this is going to be just as good, I'm sure.
Yeah, and this will be a little bit different because instead of me like asking you stuff, it'll be the audience.
Yeah.
So let's go through. There's a lot of questions here, and I want to just pick out some really good ones that I think you could take a shot at here. So here's one. Is there a possibility the thesis for the stock market crypto correction does not play out and we're already in a new bull market? So like what odds would you put on something like that?
Yeah, so that's a great question because there's always a possibility that's the case. And I think for me, it's probably around 30% chance that we could have some sort of new bull market that resembles the .com bull market. And the catalyst would be AI, right? So if AI really starts to revolutionize things like .com did in the late 90s, then that could take us to even more ridiculous valuations. Having said that, just one of these really, and I love drawing these parallels because I think as humans, we see mirrors of ourselves and our behavior in history. And one of the things I was talking about today that I think your audience will find fascinating is that buying puts on the market is the cheapest it has been since 2008. Now, again, for those of you that don't know what puts are, it's basically you're buying a contract that pays out if the market drops. So it usually costs a premium to buy, and right now it is as cheap as it was in early 2008. We know what happened later in 2008 and 2009. In the same comparison, in 2008 in January, Ben Bernanke came out and said, we will not have a recession. The market's resilient. Everything is going to be fine. And what we know is yesterday, the FOMC also came out, the Jerome Powell, and said, hey, we don't anticipate a recession now. So, again, it's absolutely there's a chance we could be in a new bull market, but there's also these eerie parallels with the financial crisis or just pre-financial crisis that I think is kind of crazy.
Great answer. And I think that's something that a lot of people have wondered, like with the market pushing higher, and how do you navigate that? Another question I have is, so this is kind of a question for me, but I think you can take a stab at it too. I've talked a lot about a secondary scare with Bitcoin. So like in 2015, we had a double bottom, and sort of the last cycle we had a higher low because of the pandemic drop. And so I've sort of speculated before that the window for this secondary scare before a true bull market can take us to new highs potentially would come sometime between, let's say, like August and March, sometime between this August and March. But I guess the question is like, what likelihood do you think that would happen versus what happens if it occurs after the halving?
Wow, that's interesting. So I would tend to agree it probably would happen prior to the halving, just because history, that's been the way history has been done in Bitcoin's history. For me, it's very much, and again, I think this is where Ben and I differ a little bit. It's more so watching the charts, right? So as long as we have this very defined uptrend channel or trend line, and we can see every time we pull back, we bounce, we pull back, we bounce. So what I'm watching here is, number one, you can see this is the beginnings of a bear flag, which is starting to tell me that we have another leg lower on Bitcoin in the near term, probably coming in the next week. But the big question is, when we get down to this $27,000 level on Bitcoin, does it hold? And the reason why that's significant is that if you break that, this is what I would refer to as the uptrend trend line. If you break that, now you've kind of put an issue in with the uptrend. And that could lead towards significant selling back to the downside. So let's just say we continue to hold this and we actually start going higher. Well, then you got to respect it in the near term. And you could say, okay, well, maybe we don't break this line till next year after the halving. But my guess is, at least, and I think we're on the same page, is that there's probably some sort of secondary dip coming in Bitcoin.
Yeah, normally the uptrend stops in August or September of the pre-halving year. Like that's historically when the drop commences, and normally it's brought on by a stock market correction.
That's
Um, Interesting. I mean, the stock market is pretty
dude.
elevated.
I mean, the stock market it's unbelievable for folks. You know, a lot of your audience may not be investors in stocks, but you know, I've been doing this now for over 20 years, closing in on 25 years. And I can, on one single hand, I can count the amount of times where I've seen the insanity where, you know, you have these mega cap companies that just go and go and go. And you could have bad news and the market gets bought. You can have good news and the market gets bought. It's almost like that. It's very similar to what we saw in 2021 in crypto going on in stocks right now. And so to me, it's that's one of the reasons why I'm kind of nervous, is because every time I've seen this in my history as a trader, this has been the precursor to something bad. And then we talk about, if the stock market does correct, let's say we drop 20%, what happens to Bitcoin in that scenario?
Right. And also when it drops too, it's like sort of like the stairs up and the elevator down. You know, you don't really have any warning. It just goes down 20% or something.
Yeah, and a great example of that is in '07, right? Or in '08 and '09 is, you know, you basically had a bull kind of grind higher from '02 maybe to '07, and then we dropped and wiped out 66% of the stock market's returns in, or upside in basically a year and a quarter, right? From 2008 to early 2009, it was all wiped out and then some, and then we bounced back. But you're right, takes the elevator down, stairs up.
Yeah, kind of like 1987, man. That would have been scary to watch that, because that happened. It was like a 20% drop in a day.
Speaking of speaking of interesting little tidbits, is so I just mentioned about the buying protection via puts is the same cost or less than '08 now. The last time, so the Dow Jones Industrial Average has had 13 up days in a row. The last time that happened, 1987.
Hope you guys sleep well tonight. Next question. If you had to speculate on something breaking in the economy, because like we can point to like 1,000 different things to worry about, right? But if you had to pick something, what do you think would actually cause the market to go down and to cause the Fed to I mean, obviously the Fed would pivot if something broke in the economy, right?
Yeah.
Which would be represented in the stock market crashing likely. But if you had to guess, do you have any guesses as to what that catalyst might actually be?
Yeah, I would think it would be the jobs market, right? So we even today we have initial claims coming in at 221,000. Really, unless it gets above 300,000 in terms of people filing for unemployment, there's really no worries. You know, you don't really have to worry about a recession. If you get above 300,000, that's usually when things start to get messy. Non-farm payrolls is next Friday, so I'll be watching closely to see if there's any sort of surprise there. But the jobs market has been resilient. You know, you could speculate on why. My guess is it has to do with people hiring during COVID or having so much trouble hiring during COVID. They don't want to fire people with a small, like right now, we're hearing it's going to be a perfect landing. We're going to start to, you know, reaccelerate in the economy. So if you're a business that's slowing and you're like, okay, I could fire this person, but if we're going to reaccelerate, I don't want to do that because I couldn't find this person for like a year during COVID, you're going to sit on the sidelines and not fire them. So I think it would be the jobs market that I'd look at the most right now in terms of the trigger for things to really get negative.
All right, fair enough. There's a couple of questions here. I'm just going to put them together. One is, what are you doing with cash? The other one is like, I've been pretty heavy cash with regards to when I talk about crypto, because I still think that the altcoin market is a tough beast to want to get into, just because of how dependent it is. So I'm just curious, like what are you doing with cash right now?
Yeah, so the first thing is I don't mind having some cash on hand because it always gives you the potential to take advantage of an opportunity, right? When you're fully invested, it's like, oh crap, I see this great opportunity, but I have all my investments and all my money used up. So having some cash is actually a good thing. I do have some short positions in the stock market right now. And also, I'm very close to picking up some more metals. So I'm looking at gold, palladium, platinum. I'm just waiting for a little bit more of a retrace down here. I know this seems like inconsequential, But for me, it's all about levels, right? So we hit this level of support on gold. We retrace to about 1933 to 1935. I'll probably pick up a couple $100,000 in gold bars or something like that, and just kind of utilize that to kind of tuck cash away. And keep in mind, I mean, I'm at a different stage of my life than a lot of crypto investors. If you're in your 20s, you don't have to worry about this. I'm in my 40s now, right? So, for me, it's like, okay, I don't want to buy an altcoin and wait 10 years to see if I'm broke or if I make $1 million or $2 million. I need to kind of protect my money. And gold, it kind of offers me that slow and steady. And even if it goes down, it's probably not going to go down a ton, right?
Fair enough. Here's a good question. I'm actually curious what you think about this. What do you think about ETH flipping Bitcoin?
Wow. That's a good question. So, I mean, just looking at ETH's chart, ETH to me continues to be a little bit weaker than Bitcoin. So at least in the near term, it's hard to imagine that that'll happen. I would look towards regulation. I mean, it's tough to know. All I can do is look at the short-term chart, and I'll defer to you what you say usually about this. But one thing that gets my attention is that there's clearly a high back in April. And while Bitcoin retested that high and briefly made a new high, we can clearly see that ETH never got back up there. So at least in the short term, ETH is showing us a negativity to Bitcoin per the charts.
I'm just going to pop through as many as we can. What do you think of the U.S. high yield corporate bond market?
Yeah, so I heard something crazy about this, and I haven't done a lot of research, but I was reading that Microsoft bonds are trading at 60 cents on the dollar. And again, I haven't looked into it enough yet, but it's something that's on my list to look into. But I'm very curious why that is, considering these are the biggest companies in the world. You would think that it should be 100 cents on the dollar. So again, I don't know enough about it to answer. I don't know, Ben, if you have any insights into this, but I certainly do know that there's crazy things going on. And I'll just point this out, is that yesterday we're seeing a rally today in the stock market, partially because of Meta earnings. Meta earnings were very good, but also because the Fed was taken to be a little bit more dovish. That's okay. And I listened and I agree with that. But what's fascinating to me is that the dollar, which you would assume would go down if the Fed was more dovish, is actually rallying today. And the 10-year yield, which also, if the Fed is more dovish, right, the thought process would be they'd be closer to cutting rates. The 10-year is actually surging today. So again, we have this weird kind of divergence going on between what Jerome Powell said and what the bond market and the dollar, the Forex market, is actually telling us. So I'm not sure if you have any insights into the corporate bond market.
I don't really have a ton of insight. So I was looking into it a few weeks, because I'm always interested in chasing yield. I talked to my brother-in-law who works on Wall Street, actually, and because I was like, are these safe? And I don't know. I got the sense after talking to him that those investments are a lot more risky than I'm actually comfortable with. So I just sort of decided not to spend too much time investigating it. So I don't know. It's not really my cup of tea, but I didn't know if you had any.
And I think you're right about that. I mean, if you're going to do corporate bonds, you want to stick with like an Apple, you want to stick with a Microsoft. Like don't go to some of these companies that have to raise more cash, especially at interest rate levels where we are now, because there will be more. In fact, you probably have these stats, but I know that corporate bankruptcies are spiking dramatically in the last 12 months.
They are. And I was looking at one that was offering 11 or 12%. And that was why I asked him. I was like, is this, but it's not. I mean, obviously, if you're seeing that, it sort of should raise the same alarm bells as Luna did, right? If you're seeing 11 15, 20% anywhere, it's probably too good to be. If it sounds too good to be true, it's probably because it is too good to be true.
Right. Exactly. I think the Microsoft ones that I was referring to are trading at around 6%. They pay about 6%, which is just a little bit better than treasuries and so forth. So it's more in line with what you'd expect. It's a little bit more, but it's probably a lot safer than 12. If someone's offering you 12%, it's a little risky.
Right. And it's certainly riskier than just getting like a CD or something. I would imagine. Yeah. Let's just keep going. What do you? So what do you have a target for 3M by chance?
Yes, in fact, that was one of the ones we talked about recently. I think I put this out as a buy on Twitter, even and so forth. And you could see the downtrend. And this is kind of what I do for the stock market, guys. Is like I'm not the type to buy Nvidia at these highs. In fact, I'm short Nvidia, which I'm out of the money on right now. But I don't mind as long as my thesis stays intact, sticking with it, that it's ridiculously valued. But when I look at something like a 3M when it was down here, and we say, wow. The last time this is this 07 highs and the 2011 highs, and that's where we are. I say to myself, all right, is 3M going anywhere, or are we going to still buy all the products that 3M puts out? And the answer is, yeah, we're probably still going to buy it. And you can see the rally here. So for me, in terms of resistance, there's a couple levels that I monitor, but right now it looks like upside short term would be right in this vicinity, right in this area here. So you're looking at like 126 or so. You have this little low from COVID. The tail goes below it, but notice how it matches with that, and then kind of right through this choppy area as well. So that would kind of be your first resistance. If you're really aggressive and you're like all about holding this for a longer period, this downsloping trend line at 170 would be the next spot.
So if someone were to take a position and it pumped into those levels, that might be the areas to sort of skim some profits out.
Yeah, no doubt about it. And to be honest, whenever I look at a chart and it has, multiple candles up already, and this is the weekly chart, so this is our weeks up, you'd never be buying here. Don't get me wrong. Like I will never chase. It's one of the things I refer to as a cardinal sin is that people, we go to, and this is a great analogy, you go to the mall or whatever they are, strip malls these days, I don't know wherever it is, but let's say you want to buy a pair of jeans and you look and say, wow, last week they were offering that pair of jeans on sale for $100. Now they're $300. Now we don't go and say, wow, holy crap, $300. I want to buy 10 pair of those. But in investing, that's what people do. They're like, wow, the price is up 3x. I got to buy and put all my money into this. You want to treat investing the same way as you do when you go to the supermarket and you look for sales, right? And if you can get that mentality down, then for me, 3M is still attractive, but it needs to pull back a little bit. Like let it pull back to some of these former little levels. Like right in here would be a great potential entry. Instead of paying 112, now you pay 105. Now your cost basis is lower and you let the good quality companies run. Because inevitably, if you look at charts, they always chop. I mean, they'll come back to levels and retrace.
Yeah, so I'm actually, I kind of have a question for you, but let me get through some of these other questions first. What do you think of stocks like Tesla and Apple at these levels for long-term buys? It's kind of that idea of almost chasing, right? Because they're up a lot.
So I think for Tesla and Apple, so we'll start with Tesla. Tesla for me is just holding on to this channel of support. So you have kind of these parallel lines, right? Parallel line. What you'll find in charts is parallel lines occur more than anyone even knows. It's kind of scary. I don't know why it happens. It's something with human psychology, just how we work. But look at how we went above it. We hit the high end here, pulled back to this line, hit this parallel line, came back here and so forth. Now, if we break below this, your next target is going to be down here at around 217 to 220. So in general, considering margins are contracting pretty aggressively with Tesla and the chart is looking like it's struggling here, I would favor the downside. I think also you have to take into account that one of the reasons why Tesla has the valuation compared to other automakers is that there's this big bet that somehow they're going to do AI better and they're going to do all this stuff better. But I keep reminding people, like every other automaker is trying to do the same thing now. Like everyone's trying to catch up and they're starting to catch up with Tesla. And so I do think honestly that at some point in the next couple of years, this stock is a lot lower. Apple's an interesting one. This is one I went short today intraday. I was willing to hold it overnight because I think it's ludicrous. I made about 5K on it. I took the money already off the table. But going into earnings next week, I actually do like the short on it. And I'll tell you why. So not only is it, if you go to your weekly RSI, in fact, let's jump that here. Right. So let me see, bring up my RSI down here. So the RSI has been overbought since May, which is pretty rare to see an RSI stay over 70 for multiple months. It's at the high end of the range, but look at the weekly. This is called a topping tail, this candle right here. In fact, let me minimize that so we can see it. So you got a topping tail last week, and as long as that high stays intact, that's a reversal signal. In addition, Taiwan Semiconductor last week, they missed on earnings. They said, hey, our AI chips are doing great. We missed on earnings because the chips that go into phones and computers are horrible right now. Well, that's Apple's bread and butter, right? Phones and computers. And so for me, at these valuation levels with the topping tail, to me, it's signaling probably a short going into earnings next week. Remember, not financial advice, guys. You got to make your own decisions. I'm just presenting facts for you to analyze.
Sounds good. Let me just keep jumping because we got a lot. I don't anticipate us getting through all of them. Don't worry.
No worries.
I'll try to go through after you leave and do the ones that you don't get to. Please rate an order of highest probability for crypto and traditional markets for the second half of the year, generally down, same, or up. So maybe for what do you think is the most likely scenario for crypto in order of those three, like down, same, or up? Like, what do you think is the most probable outcome?
I would say down. I would say down for me, and I'll tell you, it's not so much about crypto, right? And this is super weird. And I know for crypto people, this is a little harder to kind of maybe understand. But to be honest, I think Bitcoin's future is ridiculously bright. I think the stock market's picture at these valuation levels, potentially going into a recession, which, by the way, a recession is not really going to hurt Bitcoin really that much. What's going to hurt Bitcoin is when the stock market declines substantially because of a recession, money is going to get scared in general and run away. So again, my guess is by end of year, we do see some really weaker data in the jobs numbers, and that's probably going to kick off Bitcoin selling to the downside. So I'd go downside. But again, to be clear, it's nothing against Bitcoin. I love Bitcoin. It's just money is going to start to get scared. And it generally people get scared. They pull it out of everywhere.
Do you think that if one of them were to go up, like let's say equities or crypto, do you have an opinion on which one is more likely to go up in the second half? Not to say that either of them have to, but if one did, would you think it's more likely to be stocks or more likely to be crypto?
Wow. I would say, if I had to pick,
you kind of think of them in tandem, right? But
I do, but if I had to just, and I'll just explain this real quick, is that I would say that if I had to pick which I'd rather be long for the second half of the year, I'd probably pick Bitcoin, and I'll tell you why. Is because if we do go into a recession, and let's say inflation, and I think we talked about this on our Monday No Shill Zone, is that we're starting to see oil rally up 15% month over month. Gasoline's up 15, 20%. Agriculture products like wheat and so forth up huge, new 52-week highs. We're starting to see some of the inflation inputs, even housing, going up now. And so inflation is probably going to get sticky around 3%, maybe even inch up a little bit. That means the Fed's going to have trouble cutting rates. If we see the economy really start to stutter and rates can't come down, you are likely to see more banks struggle. And what we know is that when the banks started to fail, like Silicon Valley Bank, and people got scared, they ran into Bitcoin. So if we do see the stock market decline substantially, there's a small chance. I don't think it's going to happen, but there would be a small chance crypto could outperform.
I guess there's also a chance too that like everything might go down quickly, but perhaps Bitcoin bounces back first.
Yes. Just like gold, by the way, that's a great point, because we saw in the COVID crash in March of 2020, even gold flushed, but gold came back really, really fast.
Right. Here's another good question. So, like I've sort of said that my high end target for this year for Bitcoin was 35K. I will say, like, the further we get out into the year, the less likely I think that's going to happen. Like, I would have assumed that if it was going to happen, it would have occurred like in June or July. We're almost at the end of July. It still hasn't happened. So I'm starting to think that we won't even make it to that level. But if we were to make it to that level, does that mean, do you think that means we're in a bull market, or could it just be, just a trap to get people to come back in?
Yeah, that's a good question. To be honest, it's hard to know for sure. Looking historically at Bitcoin has had multiple 100+% bounces in bear markets, right? Heck, I still remember vividly Bitcoin at 3,500. Then it went to 10K. Then it came back to almost that same level again before rallying up into the new bull market. So it's tough, man. I would say like one of the things to do is just, for instance, dollar cost average, right? So again, we don't know where the exact low will be. So dollar cost average, but also you can do that on the exit strategy, right? If you want to let some of your Bitcoin run at 35 and take off a little bit, you could do that too, and kind of inch in, inch out.
Fair enough. All right. I'm going to suggest we quickly do 5 more questions. We'll let Gareth wrap up, and then whatever questions he doesn't answer, I'll try to go through and answer them. Does that sound good to you?
Perfect. Yeah.
All right. So here's a question. So it's, what do you think of Bitcoin's ROI each cycle is diminishing return? by a factor of 5.3x. So I think that's true for the last 2 cycles. The cycle before that, it wasn't a 5x, but it was for the last 2. That would give this cycle roughly 400% or 75K if we assume 15K is the bottom. So again, this is one of those things where if you assume that 15K is the bottom, which of course is a possibility, do you think that 75K would be a reasonable high? Do you think it would go higher than that? Do you think it would peak out lower? What do you think?
Wow. Yeah, so
that can include a potential double bottom first before going back. You know?
Right. Yeah, and I think historically that's what we've seen. We've seen those retests, one final retest, and we see again some of the factors bring in buyers at that level. But yeah, I think 75K. I mean, I ultimately look at the bigger picture. It's a little harder for me to analyze from cycle to cycle, from bull market high to bull market high. But I still think we're going way above that eventually. It's just again, how high could we go? So I would defer this more to you and your thoughts on it.
Okay. Powell said, we talked about this earlier. Powell said that we probably won't go into a recession, and the soft landing scenario is a possibility. Are we to believe in a soft landing? And what are the consequences for us? So I'm trying to sort of interpret the last part of that question. So maybe if I could rephrase it, should we believe in a soft landing? And let's suppose we do get a soft landing. What are the consequences? What are potentially some of the longer term consequences of a soft landing?
Yeah, so the first thing I would say is that the Fed has historically never been able to engineer a soft landing, right? They're dealing with backward dating analysis, so they're looking at data coming that's old already by the time they're getting it. And there's this kind of, to me, especially in this scenario, the Fed was caught and embarrassed when they said, hey, it's going to be transitory. And then it obviously wasn't transitory. It didn't vanish in 3 or 6 months. It has stuck around for a long period of time. They had to aggressively raise rates. So I think human nature is that when you kind of get embarrassed one way, you tend to overstep in the other direction to be like, all right, I got to stamp out this inflation. So again, considering the Fed has never engineered a soft landing, it's really hard for me to say like, oh, this will be the time where they raised rates from the lowest to the highest in 22 years in the shortest amount of time. This somehow is going to be the time when everything's going to work out and be beautiful is just not something in my vocabulary at this point. I could be wrong. I've been wrong before. Now, having said that, I also think that the economy is in a very tricky spot here, because if Jerome Powell is right and that we're not going to have a recession, then oil is probably going up due to demand increasing, right? And a lot of these other factors that are in CPI will start to increase again, which means that the Fed may end up having to raise rates more. Now, if we go the opposite way and say, oh, well, we do go into a recession, well, then, yeah, they can lower rates. Maybe inflation does drop because of that. But at the same time, we're in a recession, which means lower earnings per share and obviously lower equity prices. So there's this weird kind of double-edged sword that we're dealing with now that I don't think the markets have quite grasped yet. Now, if we do get a soft landing, the repercussions, I mean, number one, that would be the best case probably for everyone as a whole society, that no one has to lose their job or there's minimal job losses. But again, it's I would assume that inflation, if we get a soft landing or perfect scenario landing, I would assume inflation tends to stay a little bit more elevated.
What's interesting, this is sort of just like just an anecdote, is how oil is just still moving higher. And
yeah,
one of the things I've heard a lot of people say who've been in oil for, have been trading that market for a lot longer than I have, is that the cure to high oil prices are high oil prices, right? Like, so the higher it goes, the more likely, because people just can't afford to keep doing it, especially with high inflation and whatnot. The thing that is really striking me this time, Gareth, about this rally by oil is that I feel like in some of the prior rallies, it was accompanied by like headlines of like major cuts and stuff and supply. I don't know that I've seen any headlines in this rally, but it's still just kind of slowly going higher. What's your view on this?
Yeah, so you did see a breakout, right? So we have this longer term trend line here. So short term, we have a breakout on oil. We're now at $80. Again, just to point this out, is that if you go back to June 30th, the last day of last month, we were at $70. So we're now 13% or so, just month over month higher in oil. I would say this is that it's probably has to do with China starting to stimulate their economy by printing money and doing what they're doing. So the idea is that maybe China's economy starts to uptick, in which case the demand for oil goes there. And also with the Fed, if people are really buying into this narrative that that we're not going to have a recession, then it makes sense. We're going to start to reaccelerate on the economy, and demand for oil is going to go up. So I agree. It's not a headline driven thing right now. It's more of, the concept of what we're seeing with the economy, or expectations of the economy.
Right. I also sort of threw this question up on the screen. Any comments on the U.S. that they're no longer? It says thoughts on oil and the U.S. no longer selling their strategic oil supply.
Yeah, so I don't know. And again, I haven't been following this super close, so I don't know if they refilled it. But I will say this is that it turned out to be a very good decision. Like, if you're looking at it as a trade, when they started to sell that oil from the strategic reserve, we were north of $100. And let's just hope they were smart enough to refill it when we were in the 70s or the 60s, in which case it was a fantastic trade. As a trader, I commend them. But again, I don't know much more about that.
What are your views on the BNB Bitcoin valuation? So this is just from a technical perspective, like BNB Bitcoin. If you're just a technical trader coming into this chart, what do you think what are you looking for? I mean, it kind of looks ugly on those time frames. What do you does that just look like some type of bear flag right there, or is it? What do you think?
Yeah, that's kind of what I'm seeing here. So we actually have what we would refer to as as kind of a little bit of a wedge pattern, right? So you have a wedge pattern, and wedge patterns eventually meet, which forces price to break one way or the other. So looking at the bigger picture, the macro pattern here is a bear flag essentially. So it's not a great chart setup at this point on BNB. And I think it's important to recognize, if you just go to BNB US dollar, there was this little channel, and we've right now we've stayed below. We haven't recaptured it, and that's also a slightly bearish signal for BNB. Just the fact that we've broken below all these low hits, and we haven't recaptured it. So again, to me, it means that, well, you don't know, but there's got to be something more that the SEC is going to release about this, I assume. Very strange, honestly. Nothing more has been released following the initial accusations, but it'd be interesting to see in the coming weeks if something does come out.
Yeah, I've been following this one a lot too, and I'm not. The fact that it's holding right around 240 is, and not. I mean, it hasn't seen any upside move really, even though total 3 did get a bit of a bounce. So it is a little concerning, I think, looking at it. So I'm going to say let's do 2 more questions, and then we'll just wrap it up. Sorry if we've gone over that, but I'm just going to try to find some really good ones that are really specific to you. So let me look here.
Can I just show one thing while you're finding that, guys? I just want to show you, my love for charts is unbelievable. But if we look at Meta gapped up today, and there's a tendency for gaps to fill, right? And there's a huge gap going back to February, where Meta closed the day up here at $325 and gapped lower at 239. Massive drop. Well, if you look at today on earnings, where did it go? It opened right there, and look at the selling start. And when you fill a gap from the underbelly, it usually triggers selling pressure. And again, Meta certainly starting to sell back down. I wouldn't be surprised if this is a short-term top on Meta.
Fair enough. Do you have here's a more of a technical question. What's the difference between a topping tail? I think you mentioned the topping tail earlier, and a shooting star.
Yeah, shooting star is the close of the candle, and this is getting really nuanced, but a topping tail, the tail must be long. You must be at or near a 52-week high, and you have to close in the lower 25% of the candle. When it's more of a shooting star, it's more of a close in the middle. It kind of, to me, it resembles more of like a little bit closer to a DOGE formation. I'll have to break out. Maybe next time I come on in a few months, if you want me back, I'll bring on some specific educational stuff, and we can go over some of these technical setups.
Yeah, fair enough. Yeah, because this is the technical stuff. That's not really something I'm that familiar with, right? Like I'll honestly just say, like, I'll leave it to the experts, because I'm not that familiar with some of these sort of like these technical patterns. Maybe one last question. And okay, here's a good one. So what are your views now here on TLT? Because this is one of those ones that with the 10-year rallying back higher. I mean, again, I think part of the reason, just to give my perspective, is that you have I mean, with oil going back up, with inflation potentially showing some signs of renewal, it likely leads to the Fed having to go higher for longer. Therefore, the 30-year, the 10-year, they go higher because people recognize that they're not pivoting anytime soon. Therefore, TLT is going lower. But we talked about this, I think, a little bit a couple of weeks ago. I'm curious if you have any updated views on TLT.
Yeah, so TLT is still stuck within what we would refer to as a consolidation range. Even with today's move, you can see this is your line. So as long as this line holds on TLT, which is right around $99.15, this off of anytime you have a move up and you consolidate in the upper ranges and don't take out that low, this would be slightly bullish in a bigger picture, right? Now, if this line gets taken out very quickly, you head back down to the recent local low here. So right now, I would look at this and say, okay, rates at some point probably reverse, and that would create a move to the upside when rates fall, TLT rises in general. One of the things to look at, though, and this has me perplexed, and I kind of mentioned it early on, is that the 10-year, if we look at the 10-year, the 10-year is behaving just like a chart should. You had, again, here's a move. In the upper portions, you stayed within this channel. You broke out and you retraced to this was resistance here and here. Now it becomes support and we're starting to rally up. So this is something I'm really watching very closely because I'm a little unsure what it means. Just like, again, supposedly the Fed was more dovish yesterday, but then yields and rates are going up today. The 2-year soaring as well. One thing to watch on the 10-year, it seems that when we get above 4%, things start to break. That's when we first had that initial bank crisis back in March, is when we saw that first push above 4% on the 10-year. So just be aware, we're just underneath. We're at 3.976. Watch that 4%. We briefly got above it here and we retraced. If we break out to the upside, I do think that causes some problems in the underbelly of the banking system.
All right, Gareth, I appreciate you coming on and answering questions. There's one last question that I wanted to put up here, but it just basically feeds into sort of a transition. And that's, someone asked if they want to learn technical analysis, any recommendations. Obviously, I think Gareth has a pretty good head on his shoulders. And so I would recommend you go check out his YouTube channel. He's got Gareth Soloway as one of his YouTube channels. He also has Verified Investing. Gareth, if people want to find you, can you just quickly tell them where they should go?
Absolutely. So the two websites I have, and the hope is eventually to merge them, but one is inthemoneystocks.com. I've run that since 2007, so 16 years. That's stocks and commodities and kind of macro. And then I have Verified Investing, where I have a service on there for crypto trades. And again, I'm not an active trader. I put out trade signals, 96% success rate actually, but I only take trades when they're super high success rate. So if people come to me and they're like, hey, I want to trade every day, you're not going to get it with me, right? I wait very patiently for the perfect setups, and then I make money that way. But I do daily videos and lots of insights on the technicals, on the macro and all that stuff. And so those are really the places to find me. And yeah, Ben, I mean, I really enjoy our time together, because when you have like-minded data people and chart people, it's a match made in heaven.
Yeah, and I really enjoyed it. You know, and by the way, guys, we also do videos every single Mondays. If you're not following that, make sure to check that out.
Yeah.
And I wanted to make sure that this was a little bit different than that by getting you guys to ask questions to Gareth, because it's kind of hard, because, like, a lot of people might have questions, but they have no good way to just get it directly to you.
Right.
Hopefully this has been insightful for everyone to have Gareth come on here. We're gonna send Gareth off. I know he's got a busy schedule, but what I want to do is go through a lot of the other questions. But Gareth, pleasure to have you here again, and I will see you on Monday.
I look forward to it, Ben. Have a great weekend. All right, buddy.
You too. Bye. All right. So what we're gonna do is we're just gonna continue going through. I did not want to not answer any of the questions myself, but I also wanted you guys to get just some insight into what other people are thinking. So let me go ahead and share my screen, and that way we can go ahead and go through the questions as well. So here was the first question, and I skipped it purposely because I didn't really think it was a question for Gareth. It was more of a question for me, and it was coming from Lucas, who says, I've been out of the cryptoverse for over a year, personal reasons. Where do I start to get back in? Which content should I start with, and how do I figure out your stance on the coins that I have? So my general stance on most things, as it has been for the last 12 to 18 months, is that Bitcoin heavy is where you want to be in terms of crypto. Most altcoins will likely bleed to Bitcoin. There are going to be a few that don't. And I just want to say that I'm not trying to rail on the few that don't. There's always some, but collectively, most of them will bleed against Bitcoin until we see the dominance closer to that 60% level. So that has been my view for a long time. Honestly, you probably could have checked out a year ago. You come here today, and my view really hasn't changed. I mean, in the halving year, it's different than the bear market year. It's halving year. We typically go up about half the time and then down half the time. So I think we are likely getting to a point here with crypto relatively soon where it rolls over. Normally, the roll has occurred, so the tops have occurred in June or July, but even with the tops occurring in June or July, it doesn't normally fall below the 20-week SMA until August or September. So that's generally my view. Specifically on the coins you have, it's just they're probably going to bleed against Bitcoin. If you have one that's been putting in higher lows, for 6 to 12 months, and perhaps that would be an exception to the rule. But for the most part, I would argue that they will likely just bleed against Bitcoin. I'm going to try to go back through and get to the questions that we didn't, that he didn't really answer. And let me just start from the bottom and then work my way up. Someone says they're happy to see him again on a Thursday. Sounds good, guys. Yeah, what I'd like to do is try to bring people on occasionally, not to replace what I'm doing, but just to give you something new, like something that I might not talk about. Like, I mean, how often do you hear me talking about puts? How often do you hear me talking about short-term trades? Not very frequently. And I don't really imagine that's most people's goals anyways, but there's probably a lot of people here that actually benefit from hearing those sorts of views on the market that you aren't going to hear from me. So that's the goal, is to just provide a more generalized view rather than only getting my view. Here's another positive comment about it. All right. So any thoughts on the current state of institutional under positioning in both stocks and crypto? Is it not a major argument for more upside pain for bears? I'm not really sure. So I do know that institutions were very underpositioned back in January. I don't know how true it is today. I mean, I think a lot of them have gotten back in. I'm sure there's always going to be a potential case to say there's more pain for bears, but I don't think that it's as valid of an argument today as it was 6 or 7 months ago. Current Fed funds rate and being close to Paul seems pretty to 2007 and 1997 and 1998 historically. Which period do you think currently resembles the most, if not any, especially for equity in the housing market? So I don't know that. I mean, the thing with the dot-com crash is that it basically just went straight down for 2.5 years. And that's more so what we're seeing the altcoin market do, right? Like if you look at the altcoin market, it's basically just been straight down for 2.5 years with some occasional bounces, right? I mean, this is not, I mean, this peak here was legitimately in November of 2021. I mean, this peak, which more or less marked the top, we just went marginally higher, was back in May of 2021. So we're more than 2 years out from that peak. And I mean, 2.5 years would get you the end of the year, right? Or into this year, early next year. So I think that the dot-com crash is that the altcoin market more so resembles the dot-com crash than say the S&P resembles a former version of the dot-com crash. I do think it's pretty clear that the market tends to rally after yield curve inversion, although after the dot-com crash, once we had yield curve inversion, the market basically just went down. So I think every single cycle is going to be somewhat different. I mean, you can look at some things and say that like if you look at like the ROI to low after yield curve inversion, like this example certainly makes it look like the closest one we're following is the financial crisis. But again, like they're all very different. You could also make a case that we're following the market from 1946 to 1949, which was also doing a period of high inflation. What if the recession was in 2022 after 2 consecutive negative quarters of GDP and we entered into a bull market? I don't think that was a recession. I mean, I think it's just a bear market, right? I don't think anyone ever going to look back at that and call it a recession because you still have labor market at very tight levels. You know, I mean, there's not going to be very many economists that are going to look at early 2022 and say that just because we had 2 consecutive negative quarters of GDP, it was a recession, when normally recession refers to a lot more broader things like the labor market. And with the labor market putting in historic lows, after that, it's hard to make the case that that was a recession. So I don't really think it will be remembered as a recession by economists at all. Thoughts on Disney? Yeah, so I mean, I still think that, you know, the thing is the same, right? Like if we don't go into a recession immediately, then this is an attractive level on Disney. Okay. If the recession materializes tomorrow, then it's not. And if that happens, then the downside arguably is what the downside was over here when we entered into the recession. And that's another 50% or so, which would actually get you back down to these prior highs. There's always a chance that it bounces and then comes back down later in, say, 2024 and then goes down to those levels, right? So my views on Disney have not changed. I mean, if the recession materializes immediately, then it's not a good area. If it doesn't, which again, there's still plenty of evidence to suggest it's not yet a recession, then you could easily see Disney bounce off these levels. I suppose an invalidation would be, you know, if it starts dropping into the low 80s. Will gold also drop in a recession? I don't know about that. I think a lot of times gold actually rallies. Not always, but there are times where risk-off environments, gold actually rallies. Someone asked Gareth's thoughts on Doge. Well, he's not here. I can take a look at Doge if you. So we've talked about it a little bit before. This is what I've looked at. This was the recession that materialized in 2020, and you can see that it sort of hit the bottom of this channel, or the bottom of this trend line after it had broken through. You can see that it broke through here, and now it's currently back up to around 7 or 8 cents or so. This channel right here, by the way, is at around 2 to 3 cents. I still think that, you know, you could certainly have Doge pop around in this area for a while, but I do imagine there will be a sell-off in it whenever we get a correction by the S&P. And a correction by the S&P might not even be a recession correction. It could just be like a 5 to 10% correction just because it's overbought. Can you go over which sectors perform best after yield curve flattens, maybe by using the ITC website? That sounds like it needs to be done in a full video. I don't think I can accomplish that in just a very brief answer to a question. Yeah, it looks like I did miss some more questions that you guys were asking specifically to Gareth, so sorry about that. How much will China starting to print money as is expected affect global liquidity? Yeah, I mean, it certainly could. So if you were to go look at, let me pull this up really quick. So net liquidity. Actually, I guess I can just pull it up over here. Let me go over here. So here's the balance sheet. Generally been trending higher. Again, the issue is you always have to convert this back to US dollars, and you have to look see how the US dollar is sort of faring against these things. Yeah, so I mean, if the East is printing, then it could sort of put a damper on tightening in the West, just like it did back in October, November, December, right? But you still have the Fed tightening, you still have the ECB tightening. It's sort of more like it's like a sort of like a tug of war. And again, one of the I think some of these major Chinese indexes have actually been dropping quite a lot the last I checked. I can Was it? Yeah. That one's the futures. Let me pull it up over here. Yeah, this one has actually been dropping quite a lot. This is one of the major indices from coming out of China. Um, I mean, this was the 2017 high, and then this was the 2021 high, and then you have another high here in early 2023 after we saw a lot of money printing coming out of China. But it's actually just been trending down ever since. And recently, it looks like this week it's moving back up to the upside a little bit, but it still has more or less just been a downtrend here since February of 2023. Does anything change in your view of a double bottom or even lower low after yesterday's meeting? Fed not predicting a recession anymore. Shall we start thinking about alts already? Love you both, guys. No, I mean, I don't. I mean, look, what Powell says in terms of whether they're predicting a soft landing or not, whether they're predicting a recession or not, that is really difficult for the Fed to know, because I mean, again, you go back to any prior cycle, they're almost always not going to predict a recession. And earlier in this rate hiking cycle, they were not predicting a recession, and then they changed it to a mild recession, and now they're changing it back. I could see a scenario where they just change it back again once a recession is more likely to materialize. I think the biggest issue is that it's so hard to navigate this, because it's sort of the impulsive move to say, well, if the yield curve is inverted, then that means we have a recession now. Where, as I've said, right, normally when you have a yield curve inversion, you don't have a recession immediately. It's normally upon the uninversion of the yield curve. And so until something like that happens, it's hard to even make the case that it's that we're out of the woods in terms of not getting one. So I haven't really changed my view. I mean, you could certainly still have a double bottom. You could have a higher low. You could be a low. It could be a lower low. I do think that Bitcoin will get hit when that materializes. In the event we only have a minor pullback to the bull market's work band and bounce off and break local highs, how would you then deploy if we have a soft landing and you're unable to deploy your cash below 25K? So I mean, this is why you just buy at the risk levels no matter what. And when we go to low risk levels, you DCA so that if it goes up, you don't have to worry about it. If we do go back down to the 20-week SMA, which we're basically at, if you feel underinvested, then that would be always a time where you could grab a position. I mean, we've said this all year, right? In DCA, according to the risk levels, if it's below 0.5 risk, below 0.4, whatever works for you, just a fair warning that it is normally in August or September where Bitcoin falls below, in the pre-halving year where Bitcoin falls below its 20-week SMA. So if you do try to do that, it could be something that does not play out. But in order to sort of play devil's advocate against myself, you can find a time here in like 2016 where we saw Bitcoin sort of pop up, go back down to the 20-week, pop up again, go back down, and then just sort of slowly squeeze higher here. So I would be looking for something like that. I mean, if you see that Bitcoin is just sort of slowly trending higher on that 20-week SMA, then that could be a more bullish sign. If on the other hand, it does something like what it did in 2019, where it just sort of slowly trends down into the 20-week SMA, that would be sort of another story. And so, I mean, at this point, it just looks like it's slowly trending down into that 20-week SMA. The question is does it just go sideways into it? Does it keep going down into it? I think that's sort of what will sort of define the trend. What's your strategy if the dominance doesn't reach 60%? Well, I guess my strategy for alts would be to, I mean, I imagine I would pick some up at some point, but I would struggle to do that as long as net liquidity is going down. I think is my answer. I mean, as long as liquidity is leaving the system, like I suppose there could be a scenario where dominance just doesn't go anywhere for a while, but the whole asset class bleeds, then perhaps I might get interested. If Bitcoin were to rally, then I think dominance goes up. If Bitcoin goes below the 20-week, then I think dominance goes up. It's hard for me to envision a scenario where it doesn't go up. And I think a fair criticism of that would be to say that it's being too deterministic. On the other hand, we've had that deterministic view for about 18 months, and it's played out very well, right? I mean, having that view was in fact the right view. So being deterministic on that view has actually been quite rewarding. But again, that's just my view. So I think I've gone through most of the YouTube comments. I'm going to go over to Telegram because I think some of you guys have asked some questions over there. Do you expect this bull run to be different? We passed a point of no return. In my opinion, what if all the institution and big companies start to buy Bitcoin like crazy, and this bull run will be much longer with very high prices, 300K and more? This is the exact same narrative as last cycle, though. I mean, last cycle was all the institutions are buying Bitcoin, and therefore it's going to go to 300K. So I don't know if that narrative is necessarily any different than what we've previously seen. What's your tactic after the Fed's meeting? Look, I think that there is some reason to look at. I think a lot of times after a pause, the market, the S&P drops temporarily and then rallies, and we are in that seasonality where it the August September seasonality coming up, where the S&P does get a seasonal correction. We were looking at that not too long ago. So I mean that continues to be my view. And normally it's that correction by the S&P in August or September that knocks Bitcoin below its 20-week. Do I think the S&P divided by M2 is an important indicator? Yeah, I mean, we've talked about it before. I imagine it's got to be near the highs. And sort of what we previously talked about. Maybe this needs to go over to it's already out of log scale. So if I fix the trend line here to actually connect it to the peaks, this is where it currently is, right? And we're getting pretty high up here on the S&P. I mean, divided by M2, it's getting pretty close to these levels. I mean, if it does move up just a little bit more, then it would be at where the 2021 high was. To give you an idea, though, from the current valuation, it would take about another 2.5% move to get the S&P to these historic, to this trend line, about a 2.5% move. A 2.5% move by the S&P from the current levels would get you to around 4680, so just below 4700. So a good question. Can I walk through a step-by-step on how a 20x ROI is achieved? Yeah, so normally, so what I did last cycle, so it's on the secondary scare that historically is where a lot of the money is made. So because we often move up quite quickly after that. And what you'd be looking for are altcoins in that time. Okay. One thing that has played out differently this time compared to last time. Last time, when we were here, altcoins were popping off. This time, when we were here, altcoins were getting wrecked. Normally, when a true bull market is born, where we're going to go to new highs by, within crypto, we do normally see altcoins pop off before Bitcoin does. But this time, I don't really think we saw that nearly as much. We saw Bitcoin take the lead more so like it normally does in a typical dominance rally rather than anything different. So I still think that the way to play this is to just be Bitcoin heavy for a crypto portfolio. If we capitulate, well, what I'd like to see is I'd like to see alts go down against Bitcoin first. Then I'd like to see a capitulation by Bitcoin where the dominance goes down after that. And that's where you typically load up on the altcoin market. Okay. But even though I say load up, I would still only say like a 20% bag because, I mean, most of it needs to probably be into Bitcoin and ETH. And the idea is you ride a parabolic rally by Bitcoin to new highs. You then convert that to altcoins and ride those. You then convert those gains to Ethereum and you ride the ETH tsunami, and then you get out. And that's what you typically do, and that's how you can often get pretty substantial gains in a long bull market. Yeah, so some people are saying that their comments aren't showing up on YouTube, and that was one of the comments that didn't because of the way they did it. So there's a lot of like scammers out there in the comment section that will post like really scammy things like, you know, hey, join this to 20x your investment. So like this person here is asking why their comment didn't show up, and it was because the word that they put in was one of our like blocked words, right? Like of like you know, just that was a similar thing that someone might say, like one of the words that like a scammer has previously said that they just kept spamming the channel with, so we just blocked that word. So if you ever put up a comment and it's not showing up, there is a chance that it's not showing up because you just happen to have put in one of the words that we've blocked, right? So like other words that we've blocked are things like Telegram, right? Like, you know, that's a word I believe that is blocked because there's so many scammers that will say, hey, join my Telegram channel or join my WhatsApp group. We just sort of block those words because otherwise, because it just by doing that, it just cleans up like, you know, 1,000 different comments just like that. So do be aware that sometimes when you post a comment, it might not show up just simply because you're posting something that has a word that is blocked on my end. Do you max out your retirement accounts before you put money into equities and crypto? Not always. I guess this year I have. This year I have, but that's not always true. Do we have any more questions? It looks like it's I think we've gone through most of them. Emily says, can we still make life-changing money with crypto? Yeah, I think so. I think that, I mean, I do think that crypto will do very well in the future. I just think we're in growing pains right now, you know, and a lot of these altcoins will probably pop off again one day. They just need excess liquidity to come back. The good news is with the Ripple and the SEC news, some of the regulatory risk is kind of kicked down the road for potentially a little while. So I would say the bigger risk right now is just liquidity. We just need liquidity, and we don't have it right now. And then when liquidity returns, so too will likely the altcoin bull market. The final capitulation event tends to be very short-lived about when in regards to holding cash. Yeah, so I mean, I think if something like that were to happen, if we capitulate into a recession, you got to be quick because I think for crypto it'll come quite quickly. Can you show us at what points in the 2020 to 2021 bull run you decided to sell from Bitcoin to alts and then to ETH, and at what you used to help make the trade? I mean, yeah. So if you actually go back and look at some of the older videos, you'll find where I did it. So I believe the receipts are there. I basically traded out of Bitcoin throughout this entire rally into ETH and into alts. Okay, that's what I did throughout this entire rally. I traded out of Bitcoin and into alts and into ETH. And then I traded out of some alts and into ETH over here. There's actually a lot of people making videos talking about how undervalued or how ETH wasn't doing anything and how people should convert their ETH to altcoins. And I said, no, normally ETH is the last one to rally and it sort of sucks in all the liquidity from the altcoin market. And then you get your Ether tsunami. And that's more or less what happened, right? I mean, so it goes a Bitcoin heavy portfolio. So the way you do it, right, is once you identify that the top is in, one easy way to navigate crypto is just to be Bitcoin heavy until the parabolic rally to new highs has begun, right? Once you get to these new highs, then you convert it to altcoins, and then those altcoins typically pop off 20, 30, 40x. Now, the other thing, though, is I wouldn't necessarily recommend waiting until this point to get any altcoins. A lot of times getting altcoins at the secondary scare is really good, because a lot of altcoins can actually outperform Bitcoin from the secondary scare. They don't necessarily outperform Bitcoin from here to here, but they'll outperform it from here to here. Okay, so that's why I've said, right, like if and when the secondary scare comes, you can get altcoins then with USD. Then you can get more altcoins later by converting your Bitcoin to altcoins during a parabolic rally by Bitcoin. But the altcoin market, in my opinion, should wait until the secondary scare, which normally occurs sometime between, you know, the third quarter of the year all the way out till early to the halving year. What's the highest percentage of altcoins you've held, or the lowest percentage of Bitcoin? Guys, I mean, like, I mean, it depends on when you're talking about. I mean, if last cycle I didn't really hold a huge percentage of altcoins, I think it was like 10, 20%. At one point, I think my Ether position was like 30 to 40% during the Ethereum tsunami. But I will say that when you go from one cycle to another, you tend to gravitate more towards Bitcoin and ETH and less away from the altcoin market. So it's probably going to be increasingly that this cycle. Sorry, quick question about the legacy risk dashboard. Is 0.4 risk your advice? So I want to be clear, like that's what I'm doing. It's not necessarily what you should do. If you want to DCA up to 0.5 risk, I think by all means you do that. If you want to do it up to 0.3 risk, maybe you think I'm too risky, then you do that. What I do should not be interpreted as advice. It's just what I'm doing. Do you consider taking the VeChain ETH trade for the next cycle? You spoke a few times about that pair. So yeah, I mean, we did speak a little bit about that way back, but you know, it really has just been bleeding against Ethereum here. And so I'm not really sure what there is to say. I mean, it sort of even has gone below this trend line. So it certainly does not have my attention right now. Perhaps it should, but I guess you could have said that, you know, back in January, and it still has just simply bled against Ethereum. So I'm not really that interested in the altcoin market at all until the dominance is over 60%, or at least around 60%. Is it a decent strategy to have a lot of cash deployed by the time Bitcoin gets closer to double bottom, since even if it goes lower, it wouldn't be for lower for long? Yeah, I think generally speaking, that's not a bad idea. I'm going to make a video on this later, but I want to show you guys something, maybe give you a little sneak peek. If you guys remember, we've talked about net liquidity and how the jaws have opened. And so I thought, why not take the S&P and divide by net liquidity? If you do, you get a channel that looks like this. What's interesting is we've spent most of the time in the blue channel, right? There's a couple times where we've gone into sort of the lower green channel. Once was back over here in the financial crisis, and then once again here in March of 2020, right? So when you get major events, you go to the downside. But the only time we went into this red region, the only time other than today, was here. Now, what's interesting about all of this time where we were in this blue channel and we did not go into valuations that were that high when taking the S&P and dividing it out by net liquidity. Now, I think I also divided it by 10 billion just to get some reasonable numbers over here. What's the thing? We also did this during an inverted yield curve and even after an inverted yield curve. So I look at this and say, well, you know, what happens if we're just sort of going back up to this level, kind of like that S&P divided by M2, only then crash after that. You have to be careful. Remember, the crypto can crash before the stock market. Okay, crypto can go down before the stock market. We need to be cognizant of that. You could have a scenario where crypto, where the stock market corrects now for a month or two. Crypto drops below its 20-week estimate, and then the stock market might go back up in Q4, but crypto keeps dropping. And then early Q1, maybe everything rallies, and then we go into a recession, and then crypto completely resets and then goes under the bull run. That's what happened last cycle. It could happen again, and if it does, I think we need to be prepared for it. I think we'll go ahead and wrap it up there. I hope you guys enjoyed this video. Let me know, let me know what you think about it in the Telegram channel. I'm not gonna come back on the YouTube and read the YouTube comments because I'll just forget. But if you put it on the Telegram channel, I'll read them. I'm curious as to what your thoughts are. Do you like it when I bring other guests on? do you not? And again, like nothing. I'm not referring to Gareth specifically. I think Gareth is a great trader. What I'm more so referring to is in general. Do you like the idea of doing this kind of stuff? Right? Do you like it to bring someone on? Right? Could be, it could be someone who's very bullish. It could be someone who's very bearish. Could be someone who wants to only talk about precious metals, or someone who only wants to talk about forex. Like, do you like that stuff, or would you prefer to just keep it how it has been? So now that we've done it, I'd be really curious to get your opinions on it. So please provide that. Actually, you know what? I'll put out a thread. On Telegram where you can provide your thoughts on it, and then I'll take that into consideration as we continue to do this. Anyways, thank you guys for tuning in, and I will see you guys next time. Bye.